Aloha, everybody. This is the February 2022 monthly market update. We are officially into the first month of the year, and today we're going to be talking about some January 2022 statistics in Hawaii, what's new for 2022. Dean's going to scare us all with the latest scam that's been going on and other project deadlines and other news that's going to be impacting us. But if you guys haven't yet, join on live and feel free to put in comments in the comment box. We'll try and get to that here in a bit. But here we go.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the Real Estate Braddahs today.
Always gets a kick out of that because that's him singing for us.
I appreciate that, Lane. Hey, everybody. Thanks for tuning in. Like Lane said, we're in episode 48, which means we've done this for 4 years, Lane. This is like our 4-year anniversary, right?
Yeah.
That's pretty crazy, man. I gotta thank you for that. So, like, if you guys don't know me by now, my name is Dean Ueda, former CPA. We used to work for a big five firm. Then I went into real estate investing and real estate sales. So you can find me at youtube.com/real estate of Hawaii. But last month we spoke about February 1st was the Lunar New Year. Yeah. Or Chinese New Year. Sometimes people call it in Hawaii. I don't know if that's PC these days, but today, February 3rd, is actually Setsubun, celebrated in Japan, and loosely translated, it's a bean throwing festival. And what it represents a new start because it's the last day before the beginning of spring. And so the point of Setsubun is to scare away evil spirits. And supposedly these evil spirits, as you can see in the picture, they're kind of frightening. There's one spirit holding a baby and the baby's freaking out. But apparently they're afraid of beans, and not just any beans. They're afraid of roasted soybeans for some reason, not like edamame kind of stuff. But so Setsubun is directly translated to seasonal division. And so the way this festival is celebrated and the way you're supposed to scare away these oni, or these spirits, is you're supposed to get the soybeans and you actually throw them. If you're in your house, you go outside and you throw them and you chant oni ni soto fuku ni, the words, but you're saying spirits go out, good luck come in. And so that's a little culture for everybody today.
And it precedes taking a shot, whiskey, or
So funny that you bring that up, because I just got involved on the board of this sake group, and they are involved in running the Joy of Sake. I don't know if you heard that. They run it annual event in Hawaii, as well as I think it's London, New York, and Paris, I think. So anyway, one of the traditional festivities that we like to celebrate is Setsubun. So we would go to the Mid-Pac Country Club every February, and we'd celebrate and have nice dinner and drink wonderful sake, and we'd do this bean throwing festival. But we'd be doing it when everyone has a lot of sake to drink already. And me being the newbie to the group, they'd say, "Okay, here, Dean, put on this spirit mask, this oni mask." So I put on that mask and I hold a club, kind of like that picture down on the bottom left. And I'd stand with a bunch of other volunteers, and everyone would go around and whip the beans at the oni, and that, me included. And they're all kind of liquored up. So then some guys start whipping it really hard, and it feels like little BBs almost, So it's kind of a tough job to do, but somebody's got to do it, right? But yeah, we do. There is alcohol involved with some of these Setsubun festivals. But anyways, I digress. Okay, so jumping into what hopefully people are come here to hear, which is the Hawaii statistics for. So this is for January 2022. Again, this information comes out usually the 6th of the following month. So you'll hear this a few days from now, and these numbers are probably going to be slightly different, but pretty darn close. And basically, what I'm here to tell you is that we're going to break another record, and that record is going to be for single family median homes. We It's going to be 1,072,500, and for January median single family price, and the previous high was 1,050,000. So not much over, but still a record. Condo townhouses are also close to the record high at 500,000. And that's compared to prior year. You see it's a 22% increase for single family, and about a 12% increase for condo townhouses. So this is not new news. I feel like every month we're talking about this lane, it's kind of like, oh, was a record broken or not? Was a record broken or not? And the interesting thing too is, we're talking about, I'm sure everyone knows about the 3 impending interest rate hikes and the monetary policy that's gonna create a whole bunch of large corrections, maybe, But anyway,
Did they say it was gonna be 3 or
they said, yeah, they
usually
said March is gonna be the first one. They said, and I have a slide, a couple slides away that talks about
Oh,
how.
okay, we'll get there.
Yeah. So anyway, yeah. So again, one of the root causes for this is the month supply of inventory also going down, down, down. So for single family homes, single month supply of inventory is not even 1 month. So if we were to have no more houses come on market today, we'd run out of supply in a month. Condo townhouses, 1.5 months we'd run out of inventory, and so we are really in short supply, and that's what's causing these records.
So if your realtor is taking more than 45 days to sell your house, you probably need a new realtor. You should call Tina.
If it's, yeah, exactly right. And if I think the number is probably less than that. I mean, buyers look online and they see if it's more than like 20 days, maybe 30, and they're like, what's wrong? The question is,
What's wrong
what's
with
wrong
you,
with this
man?
house? Yeah,
What's wrong with
it's
you?
not sold. Yeah, that's true too. It's the agent.
Yeah, time to start cutting your rates. What a dean.
Somebody's not doing their job right, and yeah, it's really rough being a buyer, man. It's super tough. So here's what I was talking about. Lane, I know we don't like to talk about stocks, but I don't follow them. I haven't been for a while, but when this one popped up, I think when I opened up Google or something, and it's kind of, it's all about that doom and gloom sometimes. Right now we have stocks fall as Meta plummets 26%, and that was big. This was today, right? And then I also decided the second one I decided to look up, and I wanted to look up is the inflation rates, because you're talking about super high inflation. And I know, Lane, we like to see when the inflation for rent is going up really high, right? That's always fun to see, right? So here, inflation accelerated, however, for shelter, 4%, 4.1 versus 3.8%, right? And we have amazing new vehicles up 12% inflation, used vehicles 37%. I mean, that's if that's not hyperinflation, I don't know what was. I just sold my Forerunner, my used Forerunner, and I think I sold it for too little bit. You have those chip issues too, right? And I know you got a new vehicle too, huh, Lane?
Well, I bought an Escalade, I think for like 45 like a year ago, and I sold it for more than I bought it. So in that 6 months or whatever. But that's inflation for you. So
yeah,
if you're there sitting there with more than a couple $100,000 of debt equity, we're talking to you, man. Yeah, you.
I know.
Oh, no, I don't mean you. That you too. Or well, I guess you own a house, so probably, right? Your house probably went up 20%.
Yep, yep, yep.
Probably
As
you probably
always.
have $1 million house since they all are, right? So that's 200 grand.
Yep, yep, yep. So I always like to talk about the different scam of the month. Actually, I just became the quote unquote tech SME, not the SME, but I'm supposed to be help supporting tech for my brokerage, and so even more so, I need to keep up with these. But I get a kick out of some of these because they really do feel close to home. Lane, you and I, we use Google Docs ourselves, right? So there's this current scam where they cyber criminals will use a legit Google account and create a document in Google Docs, and then they'll tag you in the comments, right? So then that will give you that would prompt an email to be generated to you from Google. So then you're gonna see, okay, I'm tagged in a comment. So then you'll go into the link, open up the document, look at the link in the comment, and unfortunately, that link is a phishing link that's has malware or all that kind of good stuff. So these they're getting smarter, and it's getting very close to home. It's almost like COVID from the standpoint of when is it going to hit us, right? Because um yeah, they're just getting smarter and smarter. You got to outsmart these guys. So don't fall for these tricks, right? And whenever there's these links, be suspicious. If you're getting something from a Google account that you're not familiar with, then don't click on it. Or what I always do is I call up the person and say, hey, I got an email from you. Is this legit? Or even text for that matter. I don't know about you, Lane, but I'm starting to get some shady texts from people, and some of it is marketers, right? Wholesalers for our properties or whatnot. But
I love those
yeah,
wholesalers, right? That kind of trick people to sell their house on pennies on the dollar, right? I just don't
yeah,
think
that's
that that's
another.
ethical
Yeah,
kind of
that's
a
that's the
business.
whole
But
nother scam. No, no, no.
yeah, yeah.
Right?
I mean, that's what a
But
wholesaler is, right? They try and
right.
find some person going through the 4Ds: death, despair, divorce, or they're a dummy, and they buy their house for 50, 60 cents on the dollar when they can just sell it to you. They get a real broker, a legit broker, to sell it for what it's really worth.
Yeah.
I mean,
And yeah, like you said, yeah, some they're vulnerable, or they're not thinking straight for some reason. So that's the challenge when you're dealing with those. So, there's some legit guys out there though. I think hopefully that try to paint the picture nicely. I don't know. What do you
I don't
think?
know. I don't know. I don't buy that, man. I'm like, you're trying to solve people's problems and you're coming with solution based, whatever. Whatever. We'll give them back the 50, 100 grand you made, right?
Oh, that's
That
true.
never
That's true.
happens. Whatever. I digress. I'll add one on here. Like, a lot of people will share their screens via Zoom.
Uh-huh.
And then you don't realize, but in your URL box up on the top left hand screen, because you're sharing your whole tab, you typically see the URL of your Google Doc, and somebody, if you don't protect it, people can just go in there and start screwing around with their stuff. If you use Chrome, or I'm sure if you use Mozilla too, there's probably a plugin you can get, or an add-on to mask that URL. So, little pro tip for you.
Yeah, that's a good one. I like that a lot. So, what's in store for 2022? We just finished the new year, and so I've been getting a lot of questions from a lot of sellers and some buyers. But with this, we mentioned earlier the change in monetary policy from the Feds because of this hyperinflation going, and the implication on the 30-year loan. A lot of people are kind of wondering, hey, well, what should I do? The common question is, should I sell now, right? And it's a lot of investors are saying that, and to me, it always comes down to your end game, right? If it's a question of should I sell now or should I sell in 1 or 3 years, then I think now is a great time. If you're thinking now versus 10 years, that's a little bit of a different story, right? And it all boils down to what's your end game. So, I've been finding myself running a lot of ROI analyses to show my clients, what you're getting, and then the question is, okay, well, what can you get as an alternative, right? In alternative investments, and to everyone, they have have different opportunities, or are aware or have a different risk tolerance for different types of investment types. So then it's a matter of, okay, well, based on what you know and what you're willing to put your equity into besides real estate, then do you think you can get a higher return, right? And we had that slide previously where the 26% loss on Meta, or the Facebook parent. And I don't know, it's interesting because everyone has a different idea of risk. And so some people don't want to be landlords, they want the call that their toilet, the tenant said there's a broken toilet that needs to be fixed, and that's some people's idea of risk. It's everybody's different, right? So I'm finding a lot of people asking me that question. And again, I think it depends on the situation, but for a few of the clients I've been talking to, I've been actually telling them that now is a great time to sell based in the current situation.
What
And
are they going to put their money in? What is, it's all behind in the eyes of the person, right? Like their best alternative. Some
right,
people
so
can't even figure out how to open a BlockFi account. Some people can buy apartments. Some people can, can't do anything,
yeah, so one isn't sure, they don't have they have a financial a financial advisor. Um, they're they're not sure. Another one is going to look into alternative investments, like syndications, possibly. And let's see, the other one is, well, one of them is, I have a few that aren't investors, and they're actually gonna um, move on, I guess, in life, I guess you could say. So various situations, yeah. And oops, sorry. And then we have the buyers, right? And the challenge with the buyers is it's so tough out there. It's still the same story as we said a year ago, where you're putting in offers and you're battling against 25 other offers. And then even now with the impending interest rate hikes, there, we call it last minute shopper syndrome, or what I've heard in an article as mortgage rate FOMO, where you're so scared that as the rates go up, your buying power goes down. So people are wanting to get a place, and so that the point of that article that I was reading about, that mortgage rate FOMO, is that it could cause a little, another spike up in median prices and just volume, because people are trying to close before the rates go up and their um, buying power goes down, and they can buy less houses. So, and also getting buyers from a few fresh calls from a few frustrated buyers who, like you said, Lane, not on the sales side, but more on the buy side, where they're looking for an agent. So that those are kind of interesting. It's an educated education process for in those scenarios, where it's kind of like setting the expectations because of how tough of a seller's market it is right now. So speaking of buyers, I just wanted to remind people before my segment is done, that there are some new construction developments that are they're coming up, that have a deadline coming up. So just letting you know, if you're interested, reach out to me. But one of them was Ulana Ward Village. Applications are due February 13th, and that one is reserved housing, right? So you see the income limitations that are here in the chart below. So that's reserved housing. So there's also equity payback or equity share when you sell, so that it's you're getting the benefit of buying a house more than you can afford, but you can't have your cake and eat it too. So when it's time to sell, you're gonna have to um, pay that equity back, yeah, proportionately. So it's fair, yeah.
Wait,
And
wait.
then
So if you sell the house, a certain percentage goes back to who?
to the state, the agency, it goes back to the funds that help subsidize or
How
run these reserved housing programs.
much percent, or how does that work?
It's proportionate to the gain that what didn't belong to the owner, I guess you could say. So they have a calculation, and for like for Ulana, for example, you're actually not allowed to sell it within the period as that's stated, and you can't rent it out either.
Oh man,
So
this is like government.
yeah, so the junk thing is you don't get the full benefit of leverage and appreciation. Yeah.
Yeah,
Well, I take that back because you're again the main thing is you're getting more house than you could have afforded anyway, technically.
yeah.
You know what I mean?
It's kind of like saying to like young, like 20-year-old Dean, like, hey, you can live in mom and dad's basement, but we're gonna take half of your or quarter of your paycheck away in a way. Or
Yeah, I mean, yeah, to your point. Yeah, you don't get the 100% value of home ownership. Oh, you do, I guess, because but I mean, if you look at the whole purpose of this is of these programs is to allow for affordable housing for people who otherwise couldn't afford it. Yeah, so that's the thing, and that's why to me, some people are in the range where they could qualify for it and get it, but they could also qualify for market priced homes. So then in that analysis, when I'm talking to my buyers, it's like, hey, look at what happens when it's time to sell, and look at all of um, these rules that kind of hold you back, I guess. And we talk about all those benefits of home ownership or real estate ownership, and this one kind of ties one arm behind your back, yeah.
and that
So
reminds me of like like lease options. It's like another like kind of newbie investor play, right? Where you put a tenant in there and they lease option, you get the upside. It's kind of like the government's playing the lease option game, in a way,
so, but again, I think
Are we just getting
I
old and just kind of getting grumpy at this stuff, right? Like,
no, well, well, I get it why they're doing it, right? Because these big developments are you know they're the homes that they're selling at market price are so uh, not exorbitant, but it's just
yeah,
out of
nobody can
reach
afford it.
about
Yeah,
yeah
it's just
yeah. So this is
uh,
supposed to help those I would say middle income, but I don't know what it's supposed to be
there
less
is
than
no
that.
middle class anymore,
Yeah, the
right?
bifurcation is kind of
There,
crazy, man.
like, dude, like Pearl City, Iea, Mililani used to be middle class. It's not middle class. It's going more down every day,
Yeah,
right?
yeah. And
But
it's funny because people are saying like, "Oh, I have to buy a house now for my kid because if not, my kid's not gonna be able to afford it by the time they're ready to buy." So I hear that comment very often nowadays, and like, huh,
yeah,
I can't uh, fight that argument, because I'm
yeah.
like, what's to
Just
say
keep
what's gonna
walking. Just
happen?
keep walking.
Yeah, I
Don't.
don't know what to say, man. Because I mean, even like people in Milani are like, what? Milani town has $1 million homes now, right? I mean,
Yeah,
that's Milani Malka, but now it's like, yep, Milani town side too. Houses that are our age or more like my age. You're younger, 10 years younger than me. So some other upcoming new construction lotteries is Kohina at Ho'opili, which is multi-unit townhouse style, starting in 450. And then Mamaka is single-family homes. Those two lotteries are coming up very soon. So let me know if you're interested. Also, there is this Kaikoi at Ho'opili, which are again reserved homes. There's actually 4 units, I believe, that are available for those. And again, you need to qualify. So, and the reason why I'm talking about new construction and I talked about last month also is because I'm actually getting a lot of inquiries, and I think the 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 buyers have been losing out in the past are getting tired and they're trying everything. And the other thing too is a lot of people love new construction, right? Who else wouldn't want to live in a brand new virgin home who no one else lived in yet? That's kind of hard to do, so. And like a lot another thing is that the people from Japan, the Japanese nationals, they like new construction, they love new construction too. So to make a generalization.
Yeah.
So, yeah, that's why we talk about new construction a lot recently, and I've been posting some things about that because there seems to be a lot of interest, and it helps. Again, it's part of it is the new construction helps alleviate the resale, because if all the current inventory is just recycling, it's not going to help our ever growing inventory issue.
Yeah. And I think Hawaii is way more stable than New York or San Francisco in terms of like the high end stuff. I mean,
Yeah, for sure. So like to your point too, Lane, like for to park, if you have that money, means to park somewhere, and you don't want to lose your principal, then I see Hawaii as a great place to do so, right? Assuming you don't need the cash flow. Yeah.
yeah. But the hard thing is like you can't leverage the thing, and we're real estate investors. We don't always leverage.
Right. Yep. So to your
But
point, yeah, you can't get the
that's what's
full
hard. The
the
banks,
full. Yeah, you're always going to be limited from that standpoint. And then I told you, I've been trying to refinance like three of my properties in the mainland, and I tried to do it all one time with one brokerage, and I thought it would be smoother because I submit all the paperwork once, they divvy it up, send it all to underwriting, we'd be done with it in like a month and a half. Nope, every single one is like separate, and it seems, I don't know, feels like it's even more painful than if I did three separate, but I don't know. We're coming to the tail end, so yeah, that financing portion of single family home buy and hold purchases is starting to uh, bear the brunt on me as
yeah, it's
it's getting old.
impractical. I mean, you're
Yeah.
doing what, an all-in-one loan? Like you're putting the
No,
three.
these just three separate fannies.
Okay, good,
Yeah,
good.
no, not a commercial. I didn't. Yeah,
Yeah,
this
because
again, this
people,
is a refi.
those lenders, they always make you want to put it all in one because it's bigger paycheck for them because they
Mm,
get all one with the same amount of work for their part. But
yeah.
the problem is now you're stuck. But those things are stuck together. If you can't
Yeah,
just sell one of them.
if they sell the whole portfolio. Yeah.
Yeah.
Yep. So, yep, that's my section.
Oh, we got a Dr. Brad
Ooh,
here has a question for you.
Miss Dr. Clowns. The funny thing is, unfortunately, real estate is local. I'm in Honolulu. I can, um, I don't even want to go there for Kauai. Like I helped someone sell Kauai land about 12 months ago too, but I had referred it out. But my understanding is, it's pretty similar on all the islands of Hawaii as well as on the mainland, right? In terms of, but again, real estate is local, so it's going to be different. So I don't know if Dr. Brad, if you send me that area that you're talking about, I can probably get you more information on the specific market. But overall, yeah, kind of hard. I don't want to wing that one. But thank you for the question, Dr. Klantz.
Yeah, I mean Oahu is where you want to be in terms of like economic growth. If any,
Mm.
the other, I mean, the thing about Honolulu is it's horrible for like permitting. I mean, we're a big city; it's hard to get anything done. So new development is kind of impossible here. But on the other islands, like Maui is supposedly the best, then Kauai. But the problem with those islands is they're just like there's not really any industry other than tourism, and a lot of that money doesn't really go back into the economy. It goes out to the main subsidiaries. So I don't know. But then again, Hawaii is just becoming a banana republic anyway. So what does it matter? Anyway, oh, so my book got released last week. We hit the bestseller.
Congratulations.
So the deal is, folks, if you buy a copy, and I think it's like $3 now for the Kindle, and you leave a review, send an email to team@simplepassivecashflow.com, and we will send you a free hard copy. But you got to do it before the end of this month. That's the deal. But all right, let's get going through this. If you guys like investing on the mainland, syndications, taxes, stuff like that, check out my podcast, simplepassivecashflow.com. We go into these slides a lot more in detail, but I'm just kind of mainly here, just kind of making sure Dean is aware of this stuff. That's really why I come here.
Thank
So,
you, Lane. I very much
oh,
appreciate that.
just for you. So they were thinking at one time that there was going to be this eviction tsunami after the moratoriums on all the evictions went away. Um, so what kind of happened again? There's two sides of this, right? The mom and pop landlords who tend to deal with lower income tenants have been more accommodating or reluctant to lose tenants than expected. So they kind of bent over and kind of let the tenants walk all over them. Where the professional landlords, commercial property managers, the people know what they're doing. It's quite the opposite. But here's kind of an image on evictions and stuff like that.
I have a
Great.
situation where I have a property manager who's managing my property, and the tenant kind of stopped paying. So the property manager, threatened eviction, and this was during the moratorium. So um, all of a sudden, like something snapped out of that, and they started paying back rent timely, and then a little bit extra every time. Yeah, but
What state
it's
is this?
this is over here.
Oh,
This is on wall, and so they're making up a little bit every time, but it'll take like forever, yeah, to because they hadn't paid uh for quite a few months, I think. So anyway, um we're actually going to the eviction process, but they're still paying above and beyond. So I mean, just got to be happy, right?
or I
Because
mean that's the
they're
hard thing, right? Like there's some people, you know who these guys are, but um, they drank the Kool-Aid and they're like, screw this, I'm gonna unload this rental property that I'm only gonna make 1% rent to value ratio with, and go to the mainland, especially in value add projects. And then they told the renter that, hey man, I gotta sell the house, and then the renter just went ape shit on him.
and they trashed
And
it.
well, no, like physical altercation
Oh,
kind. So
okay.
yeah, and then and the funny thing was like the guys was like, yeah, we and my tenant are cool, but yeah, when people, you never
Yeah,
know.
when it hits the fan, right?
Yeah, yeah, you never know who your true friends are until things get bad. Or if you're really cool with your tenant, supposedly, or you're charging them too little bit. Yeah, so I mean, for people who pay their rent on time or pay their mortgages, you probably aren't aware, but here are some of the ways people are getting, tapping their money: regular income, credit cards, savings, borrowing from friends, unemployment insurance, stimulus payment. This other one is deferment. You can go into deferment or SNAP. So there were a lot of like government programs that we had our property managers actually sit down with the tenants and apply for all this stuff.
Yeah.
And one of the loopholes that I know a lot of people were doing, the more sophisticated mom and pop landlords, is there was no like, you couldn't evict people unless, but the rule was, and I'm not gonna say this is in Hawaii. I don't know if this is in Hawaii, but my understanding, what they told me, is that a tenant has to exhaust every single last option out there. That ain't gonna happen, right? So if you
Yeah.
really wanted to push the envelope, you could evict your tenants. But who knows if that's what your property manager? That sounds like a lot of work for a property
Right.
manager. 10% on the rents, right?
Yeah. So I mean, like you said, that's good when there's those programs out there and the property managers doing their job and directing them to where these relief funds are. So
Yeah.
I've had cases where one case where I didn't get rent for a few months, and all of a sudden I got this big lump sum because the property manager helped them apply for something. And then on
Oh,
the other
good,
hand,
good.
yeah, it was gorgeous, right? It's huge lump sum of thousands of dollars. Like, wow, okay, this is great. And then other situation where another property manager is like, telling them, oh, you need to do this and this and this, and here's the sites that you go to, and then you only, what is it? You only can lead a horse to water, kind of thing. So that's one of the bad it didn't work out for that one. So it just
Yeah.
depends. But having the property managers do that is half the battle, I guess, huh?
Yeah, but that's the hard thing with the property managers, right? They're usually not the best. Like, I mean, nobody really goes into property manager to make money, really. I mean, there's so many easier ways to make money,
Right.
and it's really a thankless role that a lot of times are overloaded, and just quite frankly, it's easier for them to just lie to you, the owner, and tell
Yeah.
you, well, yeah, you can't do anything. Hey, it's not their money,
Yeah.
that's not getting paid. But here's a joint Center for Housing Studies. Harvard University predicts that May is going to be the peak month for remodeling supplies and contractor demand. Now, this is the mainland, but um, this is kind of what they're predicting. Inflation concerns, we've talked about this many times. As Mr. Andrew says, inverted yield curve, which is the 10-year treasury higher than the 2-year treasury, predicts a recession in near certainty. That was like, I want to say 2 years ago.
Yeah, I remember we talked about that, and you
Yeah.
showed the graph about that a while ago.
Yeah.
I remember that one specifically.
And the folks that I follow, like Richard Duncan, like he's kind of like, well, yeah, that may be what happened in the past, but we're in a different world right now where they can just print endless amounts of money. So it really doesn't matter. We're in like kind of a different multiverse.
Government intervention in order to prevent the recession, right?
Yeah. But I actually think like they're kind of doing what they should. I mean, there's great growth, and like, not saying that these Omicrons or these things are like made up or anything like that, but these like kind of like these echo pandemic scares that kind of bring us back is very healthy recovery, right?
Yeah.
As opposed to just shooting right up. And then now what's going to happen this year is interest rates are going to kind of creep up in increments. You're talking about a great engineered recovery here, the way it should be.
That's true too, because the Feds need to have the interest rates at a healthy point so that they can do what they did the last time, right?
They need to raise it to get the dry powder.
Yes.
So every time they raise the rates, it's actually a kind of a good thing, because now your government has options or a magic trick up their sleeves to stimulate the economy when things kind of fall backwards.
And then you don't have to result into printing all that money, right?
Yeah. But you don't want to get into a situation when your interest rates are way low and your economy bottoms out and your SOL, you have no options to get things going.
Right. And then they're just printing money for our kids and our grandkids to be in all this big debt. You're making it worse for our heirs, or
actually, you and I are kind of in the middle, right? Like, they're like, what do they call them? Not millennials. Millennials are kind of old nowadays, but like the Gen Z, the Gen Zs and the baby boomers, they're like, they go at it, man. I think they're like, yeah, we could have. And you and I are in the middle, so I'm just like echoing what I hear, right? From these cats, so people don't get upset with me. But they're like, yeah, Grandpa, like, you walked every day to school and you went to work and you paid off your house, but your cost wasn't cost nearly as much as me, and you don't leave school. You left school with a decent job. I go to 4 years, 5 years of college, and maybe I'm gonna make 50 grand a year, and I'm in like $100,000-$200,000 debt, right?
In
like,
debt, right?
Yeah.
It's to your point, it's a different world.
Yeah.
Oh,
you and I are just in the middle.
Yeah. Andrew has another comment too.
What's his comment?
Oh, not a comment, but one. Oh, he's telling us about the interest on all of this U.S. government debt that we have to give us more stress.
More stress. But all right, so maybe a positive here. The U-Haul released their top 25 growth cities. So this is where like kind of the budget-minded folks are moving towards. Florida and Texas dominated the top 25.
There's like no change in that for years, huh?
Yeah.
It's a good thing.
Phoenix is another great market, geographic location. semiconductor engineering plans, Paradise Valley Mall redevelopment, transit roads upgrades. Howard Hughes is building. Howard Hughes is like a big developer. They built these master plan communities,
It's Kakaku.
and they're no dummies. So they're kind of a better person to kind of watch where they put down their money. But here's what we were talking about earlier about that low income place, right? Hawaii is very progressive. I've never seen anything like that. But normally what they do is they have this LHTC, low income housing tax credit program, where a builder can buy or build a project and they get some incentives that way. But yeah, like the Hawaii stuff is interesting.
Yeah.
Very interesting. Apartment occupancy at a historical high. I mean, it's a bull market, folks. People are like buying into bull markets. This is the time to do it. People are like, no, I don't want to do that. They'll probably never do anything. Mortgage rates start with a 2022 increase. You talked about this, and here we are at the end. We don't have any other questions. Any last comments there, Dean? Any big things coming up other than the sake in the summertime?
What? No, just I get because of this Chinese New Year thing. I just finished a whole bunch of Chinese lion dance performances for my son's team because with this flexibility that I have, we had to do schools and businesses, so we do it during the day, during the weekday. So kind of threw out my back, so I'm just trying to recover now and get back into the swing of things. And also being tennis dad, and my son has a few tennis things going on. There's a tournament this weekend, so all that kind of fun stuff for me. On the business side, yeah, like I said, talking to sellers, so hopefully have a bunch of listings coming up shortly.
All right.
How about you?
I'm just staying at home with a young kid. I can't leave the house. Business wise, more deals, and yeah, big deals, big things.
Hey,
That's
that
about it.
retreat was really great, I must say. That
Yeah,
was
we got to
really
get
fun.
you to like do the lion dance for us so we can like not do the luau again.
Oh,
I
we
think
can, but it's a short performance, so it's not very long. So, but
we're
we
gonna
can
have to
come
make
and
it go
bless.
longer. So you better like train up for that. Like whatever you normally charge, I'll pay double, and you have to really entertain us for 30 minutes. And I want there to be fire too.
That's a long one, man. But no, it was amazing. It was great. It was a great retreat, and amazing that no one got the C word that we know of.
Yeah,
That's an amazing bullet that I cannot fathom.
yeah. It's either it doesn't exist, or when you are drinking and having a good time, you are immune to it.
So yeah, maybe like you said, simple passive cash flow is it may be
Yeah,
what is that, the deterrent, not the deterrent, but
yeah.
like
Or maybe because most people are from Hawaii or from the mainland anyway, they had to test to get into the States. So they never had it to begin with. It's kind of a
I don't think
bubble too.
that I think we dodged some amazing bullet. I don't know how. I'm in awe. Honestly, I'm I'm amazed. Yeah,
Thanks.
simple passive cash flow prevents COVID. I don't know.
Yeah, and wash our hands.
That's your shirt for next retreat. I don't know.
Yeah. All right, folks. We'll see you guys next month.
Okay.
Bye.